Very good morning, everyone. Welcome to Admiral Markets today, Thursday, the 3rd of April, and we got Euro interest rate coming up, for instance, and tomorrow NFP. So quite a lot of news events today and tomorrow. We're going to take a look, however, specifically at price and technical analysis in this webinar. First of all, though, before we actually look at the charts, we're going to take a look at this PowerPoint. There it is. The disclaimer explaining that explaining that the material here is meant for a global audience. Take into consideration that the info may not be suitable for everyone. To get the corresponding info on charting, conditions, and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then also the risks involved with foreign exchange and global financial markets is high risk, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. All right, so basically by continuing watching this webinar, you agree with the disclaimer and the content of it. Anything that you see in this webinar is just my opinion only. Great. So thank you for your attention. We're going to be taking a look at the Camarilla and intraday trading. So we'll be continuing. We were looking already at Camarilla yesterday and the day before. We do that again today. And we'll be trying to even make more interesting decisions and analysis using that particular tool. We will be looking at these 5 steps to have a basic checklist prior to entry. It's always good to have a checklist before you enter to make sure that all of the conditions you want have been matched, because the last thing we want to have, and what we definitely want to avoid, is entering a trade that really isn't a trade based on our strategies, based on our systems, and find out that that was an error. Those are costly mistakes. The first thing that we need to make sure and reduce is those types of mistakes. And having a checklist and a trading plan, of course, is thereby very important. Now, once we've entered, hopefully correctly, then of course it's our trade management and then our trading psychology to implement that plan that are vital. And then the old saying, plan your trade and trade your plan, become very valid. With these sessions, we usually use fibs, trend lines, and moving averages, and we'll be using those again as well. All right, here's the wrist or calendar, event calendar, news event calendar. We got Spanish services PMI in 24 minutes. We have other PMIs from Italy and France later on, and Germany as well, Euro and Pound services. So a wide variety of European PMIs. Also got Spanish 10-year bond auction, 5-year bond auction. Well, basically the euro is going to be very difficult to trade with the euro interest rate announcement, and I wouldn't be trading that particular pair or any pairs with the euro because of that, unless you're maybe taking a bigger position trade for something. But otherwise, for scalps, intraday trades, even intra-week trades, it's not an environment that really would match, because you're going to have a lot of volatility, a lot of movement, and a lot of quietness before that. So it's going to be difficult to trade the euro for most of us, and that's okay. With the pound as well, we have our usual pound news, so probably looking more at other crosses. And then we have the ECB press conference and the dollar PMI as well, a lot of PMIs apparently today. Tomorrow we have NFP and unemployment rate, so the whole week could be actually a bit quiet. Euro dollar throughout the day had some bounces up, but not as much as I thought, and there was actually more bearishness despite the bullishly aligned moving averages. We got a break to the downside yesterday late in New York, and we're now actually at yesterday's low. We bounced off of yesterday's low, in fact, the golden line here, and the fib S1. So you can see that that's really not too interesting in any case, because price is below the moving averages and we're moving back towards them. Pivot point is pretty close by, and we're stuck between that daily low and pivot. It could really, in case of the euro, to be specific, could be bouncing back between these two zones until we have that news event. Maybe. I wouldn't be surprised in a certain way. So that doesn't seem too appealing to me. Now, we broke that orange line, but it didn't go anywhere, that break. So we're back basically, if you look at it from an hourly perspective, we are basically back to the drawing board here and waiting for either, if you look at it from a trend line perspective, you know, is this a bounce or break spot? We did bounce off this orange line here. We're caught between those two orange lines. Looks like we're caught in this triangle from an hourly perspective. We are caught in this contracting triangle. From the 4-hour perspective, it looks actually like we're back to the 50 fib and bounce off the 50 fib. Is this a hook back for more upside, or is this a hook for more downside? That remains to be seen. A break of that triangle will answer that question. The target to downside is 61.8, the target to the upside way higher. So there's definitely more potential to the upside, but will it break to the upside or to the downside? That's something we'll have to see. These blue and red boxes indicate that. And, well, I'm sure that there's a decent chance that today or tomorrow the news event is going to make a decision and will inform us which direction it's going to break. Pound dollar. Pound dollar had a lot of ups and downs yesterday. It had some good intraday bouncing spots to the upside. So maybe some of you were able to grab 25, 30 pips with this intraday upside movement that we did talk about it, that any dips, I think we talked about it, any dips could be good for some pips up. That's what happened. Eventually, didn't go that far though. And let's see. In Asian session, we had a strong up and a strong down. Quite funny. We are stuck basically in this triangle as well, if you look at it from this perspective. And if you look at the hourly, you can see prices between those golden lines, between those orange lines as well. So it's stuck in this triangle. It could break up to the upside. That would be a continuation. It could break to the downside. That would be a reversal. That's from the hourly perspective. From the 4-hour perspective, we are basically headed up and bouncing off, let's say, weekly, daily support. So it could be an uptrend continuation. For intraday perspectives, as we know, we already have the pound PMI. So it's not that interesting to look for trades right now. What could happen, though, in the future, maybe? Let's take a look at the Camarilla. And, well, we see the price went to the R2, the fib R2, bounced off the fib S1. Let's see. Looks like we got breakout trades way higher though, way lower, sorry, at 166. And we actually broke the H4. I don't think at this point of view we really have much space to the upside. If we do break our trend line, the H5 is pretty close. So that is, upon the break of this H4, the second break, there would be about 20 pips to the H5. I don't know. It doesn't seem to be that much of a space even after the news event. But in general, from a swing, not much space for an intraday trade at the moment. I don't see much space here. But maybe if we break above or below these orange lines, there could be some intra-week trade to the down or upside. The upside would be a bit more spacious. Downside has its limits in its potential movement. From an intraday perspective, the only bigger space maybe would be below L4 here. Other than that, it seems quite crowded. We take a look at the 5-minute world. Yeah, I don't really, no. Not at the moment. Maybe things will change during the day, but euro pound. Usually not too interesting for me, but it is moving down. It is broke yesterday's low, and it approached the L4, which is basically the level that we're looking for to break for a breakout till L5, right? And well, we stopped just before L4. What I'm usually looking for is actually a pause at L4, a bit of a bounce, and then the next break. Well, we got that bounce, but we didn't get the break lower as yet. Moving averages are all bearishly aligned, though. And we did break yesterday's low. So one way of maybe looking at this is, let's see. Looks like any potential move that would go close to this resistance, this top here, and this moving average could be resistances already, or a break below this fractal could become levels for us to realize that this is actually breaking. Not that there's much space. This seems like a big space, but it's only 17 pips. So euro pound, not much space maybe. Let's take a look at the odd USD. The odd USD had a smaller break to the upside. The break didn't go all too far before we moved down again, and it seems a bit wacky. Not much price action. Seems very choppy. We already completed L4 to L5. Definitely looks bearish now at the moment. However, from this perspective, difficult to say how much bearishness we could expect. Looking at the fact that we broke yesterday's low, for instance, any trade maybe that gets close to the HT short would be already a very big, or pivot point in fact already, could be more resistances for maybe when we're downside, for instance. That's the only thing that I could see, maybe as an interesting setup, because otherwise we already reached the quite extreme of the Camarilla. There's still maybe space to L3, but your reward to risk maybe is on the weak side at the moment. We'll take a look at the 5-minute. Sorry, let me just expand this chart. All right, there it is. Yeah, we're moving, as you can see, 5-minute world is moving back to the moving averages. And we know that there's divergence between these bottoms on the 5-minute world. What does that mean? On all time frames, we know that the first target is the intermediate and then the long term. Potentially, it doesn't have to always go to the long term. We just reached the intermediate. So that's the question. Will it still make one more correction to the purple? That would be basically the same like the pivot point. So that could happen, and that could be a bouncing spot maybe for downside. Could be good to wait for an actual reaction to that level, however, just to be a bit more secure in that. But that's possible. Kiwi continued with this downside, had a bit of a bounce yesterday, but not much follow through, and today continued with its lower lows. Respected the pivot here, and we got moving averages all aligned. Purple above the dark brown above the short term, and we got space down below, as we can see. There's a daily fractal here at that magenta line to be aware of at 85. So I would be careful of that 85 level. It's about 40 pips left. So this could be potentially interesting. Let's take a look at the 5-minute world. Let's see. Where's today's initial high? is here, whereas today's initial low is here. Yeah, it could be interesting to take a look at this New Zealand because there's a good space to 85. We're definitely in a good downtrend according to this 15-minute world. We have a lot of momentum to the downside. There's maybe just a bit of divergence though between these bottoms. That's the only thing that's worrying me a bit, to be honest. And that's maybe one of the reasons why we could still go back to, for instance, the intermediate moving averages and retest the pivot point again a second time. A break below these 50-minute fractals, though, maybe would negate that fact. If we break 85.33, could be the break of those fractals. Let's see, we had a break this morning of this fractal, and we actually broke that fractal here already, in the sense that we had a breakout here, moved a few pips, and if you look at these fractals, connect the trend line there, we broke above that already, if you see what I mean, like this. So we broke below the support fractal that was below the L3, so we broke that level, but we didn't go all too far before we actually broke the next resistance fractal. So they didn't go too far. That's a bit concerning in a way, plus the divergence. Well, still, if we break these fractals, it could be a breakout trade to the 85, about 30 pips there. Probably we wouldn't have that divergence. That's why I do think because of the divergence, we probably will not break this bottom and probably will move back to the intermediate first. Now, I wouldn't want to go long because that is against the trend. I'm always trying to trade with the trend. And you can see that this is definitely down. But there is a chance that we go back here. That could be either an interesting bouncing spot, or if we do break these 15-minute fractals, there could be the breakout to the downside. That's basically what I'm thinking about, these two things. Let's see, dollar CAD is very choppy. Very small daily candle yesterday, about 43 pips from top to bottom. That means hardly any space in today, so dollar CAD does not seem too interesting to me from an intraday perspective. And the Aussie and New Zealand were, in that regard, more interesting than this dollar CAD. I mean, this is not too much space. If we break some trend lines like this, but we bump into support and resistance very soon. So, no, not appealing to me. Dollar Swissy. Dollar Swissy will have its own relationship again, of course, and it's quite, on average, quite correlated to the euro dollar. The euro has, of course, the interest rate, bid rate announcement, so therefore the dollar Swissy also, in a way, has its risks because of that. If we look at the Camarilla, though, and the daily high and low, we're right at the high, which means we would need to see, for instance, a break of the daily high, a move up to the HD short, and then the next break could be interesting. Especially above a bit more higher, there could be some space. Otherwise, we see in the L3 long, right near the pivot, this could be a bouncing spot. However, as I said, with the news events, you really don't know which levels will be respected and how much respect they will get. Dollar yen. Dollar yen has been trending up a lot. Today, however, definitely quadruple divergence. We talked about triple divergence yesterday. We got another one today. So at one point, we should see a bit bigger retracement, I would say. Probably, or there's a decent chance it could happen right now. And there could be a retracement back to the 4-hour green band here. That 4-hour green band is around 103.20. And if we put a fib on the upside, let me take rid of this Camarilla on the hourly. 1 second. There it is. Okay, if you put a fib on this upside, you can see that basically this 4-hour band, the blue band here on this chart, is at the 38.2. So there's a bit of a confluence there on the dollar yen. So once again back to the 15-minute chart, we can see that there's the potential for price maybe to make that retracement down to the green band. There's quadruple divergence. So from a Camarilla point of view, or first of all, from the moving average point of view, there's this reversal space potential in between the blue and green. But we need to break below blue before we have that. Until we do that, basically there's not much space to the downside because we have already an L3 long and a pivot point right at 103.77. That could be a bouncing spot. I don't say that couldn't, but due to divergence, I think it's going to be just a small bounce before we see again the bigger retracement. Now, it might not be a straight arrow like that, but you know what I mean. So this space in here seems to me the most interesting regarding the dollar yen. The upside does not seem interesting to me. So there could be maybe some pips still above H4, but there's just a few, in fact, not that interesting. Yeah, that's about it, I guess. Let's take a look at pound yen. One thing though for swing traders is that if we do move back to a fib here, that could be a bouncing spot for one more upside towards 105, 104.80, 105.20. That could be very interesting. Yesterday's low, of course, will always provide some kind of level. So once you break below the blue moving averages, something like this, and a break of this correction here would be interesting for this move here. And then when we break below yesterday's low, then of course you might see some extensions towards that downside. Pound yen, let's take a look. Also a lot of divergence. Yesterday did go back to the blue moving averages and the pivot point roughly. That was here. That was the bouncing spot yesterday. Let me see, is that correct? Or was that the day before? Now I'm getting confused. Not sure if that was said yesterday or the day before. Anyhow, doesn't matter. We forget that. We did bounce off the blue moving average with the pin bar here and moved up accordingly to the H4 already. Pound yen definitely looking bullish. However, it's just quite high. And how much space is there to the H5? There is some space. We did break yesterday's high, so it could be a breakout trade right here, right now. The divergence is still a bit bothering me, to be honest. I don't really like this upside so much. It seems to me like a resistance pretty close by when you put a trend line like that. No, I don't know. It doesn't appeal to me. If we could, for instance, back to the HL3 here, that could be a dip again, or at least a pivot. But at the moment, I don't know. It doesn't seem to be very appealing. Not much space. Maybe if we use a very tight stop loss below this 50-minute fractal, then maybe it's not even that bad. Let's take a look at the daily chart. The daily chart has one major resistance at 173.57. I don't think that's too close as yet. It's getting close, but it's not there as yet. We're close to the 173. 173.50 is still a bit further away. Not too much further away, as we can see. I don't know. It's definitely pushing the pound is definitely pushing the pound yen at the moment, and it's not the dollar yen. The dollar yen is retracing. It's the pound that's pushing. Prior to the news event, I don't know. I would, because the news event here too, wouldn't be looking much at the pound yen or euro yen. So that's another way of looking at it. Therefore, can easily move on to something else. Let's take a look. Actually, all the others have euro or pound in it. So let's take a look at this odd yen, maybe something different. Also, quite tight range. About 50 pips. Small for a daily candle. Seems to be bouncing up at the moment, but overall very choppy. If you look at the price action between those golden lines, it looks very messy, looks very sideways zone consolidation. So that doesn't seem to offer much potential at the moment. Now, it was probably not the smartest. I didn't even realize that, when I planned this webinar about 6 weeks ago, I guess, I didn't even realize that today would be, of course, the interest rate day. So maybe today's topic of intraday trading was not the best, but I didn't look that far ahead 6 weeks ago, whether that today would be an interest rate day on the euro. In retrospect, maybe like more of a swing trade topic could be better, because I don't like trading in intraday fashion with a particular currency like the euro specifically. There's so many euro crosses we look at that are connected to that. That's a bit annoying. We don't want to do that with the interest rate day, but so I guess today is going to be more of a slower day. We can still look at potential swing trades, ideas, but intraday doesn't seem that appealing at the moment. Except what seemed interesting, there was one of them. I had a Kiwi and the Aussie, maybe, right? Yeah. Yeah, that's about it, I guess. Because these are the major pairs I look at with the Camarilla. Maybe let's take a look at something else. Let's maybe look at some swing trades otherwise. If you have any questions, let me know. 1 second, folks, as the charts are loaded here. Let's see. Let's start with the euro dollar is bouncing up at the moment. We got, if we look at these moving averages, flat moving averages and prices below it, but we do see that basically the weekly is still up. So if we do get a bounce above the daily 4-hour moving averages, there could be that breakout trade here to the upside. So that's something that seems interesting to me. That space up here, basically, from a swing trade perspective, above 138.22. Okay, the target could be 143, all the way to 143, in fact. Not sure if it will get there immediately, but the pound dollar, I would say, is similar in the sense that here too we have the weekly chart up. We have a bullish angled 4-hour. Daily is up as well. So basically, if we break above these tops here, we have a space for the pound dollar to continue up. And in that regard, we could maybe see upside to 169, 169.70, 170. Okay, so that would be the space up in here with the trend. That would be a breakout scenario with the pound dollar above these levels. Okay, so does that, I don't have the question box open. Sorry about that. If you had any questions, I actually forgot about opening that box. And I do see some questions there. Apologies. Sorry, Ralph. Let's see. Ralph has a current sell on AUD/USD. Do you think the resistance will hold? Let me take a look at the AUD/USD right now. Then I'll go to the other two questions. Yeah, the AUD/USD, if you look at this 4-hour perspective, is retracing now. How far could the retracement go? That's the question. I think that probably not much further than 91.40, which is the blue moving averages here, the daily moving averages plus, roughly speaking, a 50 fib, if I remember correctly, maybe this fib. So 91.50 seems to be roughly where we could expect support. The thing is, indeed, how much will it retrace up before it might fall down? Potentially, because we're still in that bullish trend. And let's see, 4-hour chart, I would say anything, 4-hour chart, anything that remains regarding price action below this top should be bearish, unless we get a very clear 4-hour bullish price action / candlestick pattern right here, right now. But usually speaking, you would say that that is a key level, because any break above that could actually be a breakout trade to the upside. So that would be the invalidation level, I would say, of any short or any reversal or retracement trades here to the downside. In fact, if you're a swing trader, that could be actually a trading idea one could use to target the upside. If I think the resistance will hold, that's difficult to say, really. If that resistance will hold, it's tough to say. Let me take a look at maybe some fibs. I think there's a decent chance, because we do see that we broke these bottoms here. So it does look like we're trying to push lower. It does look like we have some confidence lower at the 38.2, 61.8, and here at the 50 fib. So this up could find that resistance for more down. However, me personally, because those retracements are always a bit more riskier, I have rather wait for the bigger trend to kick in. But looking at this hourly chart, we do see the band already down. And the only thing is we are close to the 4-hour band here, which could bring some volatility in this zone before we probably make that lower side. I would think it would be a decent chance. But because the 4-hour and everything, is up, there's always a bit of risk that it will not find follow-through because it's retracing and the trend is still up. That's with every retracement trade. Manuel is asking, no, the Camarilla is a pivot point indicator, and it basically gives the values not only of the pivots as the pivot point itself, S1, S2, S3, and then R1, R2, R3, but it also gives H3 and H4 and H5 levels, L4 and L4, L3, L4, F5 as well. H is for upside, L is for downside, and basically the H3 and L3 are range levels where you could sometimes expect bounces, and above 4, below 4 are more breakout scenarios. So it's extra levels on a pivot point indicator. The moving averages, the EMAs that you see now, and also when I'm showing you the Camarilla, are something I have added. And if you would like the Camarilla, I can send it to you. Just mention that you'd like the Camarilla, and so that I don't forget the reason, and I'll get it to you, okay? There's my email. Let's see. Good morning, Dashan. What do you think the odd is up to? Currently is at 38.2 following the big news drop. Let's see, 38.2. Yes, John Mark, definitely. Just send me an email. It's better if you send me an email so I don't write down all these email addresses and stop the webinar too long. There it is. Let's see. So yeah, anyone who wants it, by the way, you, by all means, just write me an email. Okay, no problem at all. Today we didn't really look at it too long, but that had to do with that big news events today and tomorrow. So, but anyhow, the audio is the. I wouldn't be surprised if we move back maybe to that support level, which seems a natural support level, but it's nothing is a guarantee. We don't really have. We have maybe a bit of divergence between these tops in here, just a slight, because this was a bit higher than that one. Although one could say it's even as well, maybe. Probably more even. If there is divergence, then we know that the intermediate moving averages is the target. So in that regard, a move back to that is a potential. It's not always a guarantee. It's definitely not a guarantee, but it's a potential. We don't. It's not. It's never a guarantee though, because we could be maybe an expanding wedge like that. I doubt it though, but you never know. For me, the critical line is this one, and whether we get downside or not. Let's take a look at that Camarilla again. Yeah, with the Camarilla, we were saying it would be nice if the odd USD would go to the pivot or the H3 for some downside, remember? And that makes sense because this bigger top in here, the 4-hour top, is the, in my opinion, crucial level for swing traders. If we break above there, there could be some space as a swing trader to the upside. So if price gets up to there, there could be a relatively low risk, in terms of pips at least, low risk shorting zone with that 4-hour protection as a stop loss area above the blue, with the target of the 50 fib. So something like this, basically. Or the 38.2, in fact, first of all. Something like that. That space, maybe. From a 4-hour perspective, basically what we're getting is we are in an uptrend. Price is moving below the the shorter term moving averages, which means if we break above it again, this is back to the zero line, the AO, which means from a swing trade perspective, as I already said, an entry order above here with a stop loss below here, and trail stopping the 4-hour fractals could be a breakout scenario. Why is that? Because we dip below the moving averages, and if we go back above it, then we are already in a trend, everything is aligned, and that would be a with the trend breakout. Kiwi is moving down a lot. That's also one thing that's a bit funny, but the odd New Zealand is moving up a lot, that's why. And the Kiwi is actually extending quite far. It didn't have any divergence, funny enough, but still it reached the blue moving averages. And let's see, with this mega impulse momentum here, one would expect still at least one more downside when it moves up. I mean, there's pretty big movement here. Let's take a look at the hourly. It's a pretty steep trend down as well. However, this is not a trend. This is actually more of a momentum. So some correction of that leg is probably bound to happen at one point in time. We'll have to take a look at the 50-minute chart. Yeah, we had that divergence. We already talked about that. On the Camarilla, we are pushing through this bottom. So maybe there is that breakout trade potential to 85 here, right there. That would probably be the last space because this is so such an arrow that eventually the lower term time frame will show divergence, and we'll have to see some kind of rally up and bounce, maybe, and then back to the resistance, which could be one of these moving average sets, for instance. That seems most likely. So much space is not to the downside left, but a bit left maybe before we get the bounce. I would say definitely be cautious of that because we did break out of this uptrend line. So I wouldn't say it's an uptrend anymore for the moment. It's still bullishly aligned though, which means that after a decent correction, there is the potential to break back into the uptrend. That is yes, everything has the bullish. There's that remnants or the remainder of a bullish structure there because although we broke support trend line, the moving averages are still up, and only the short-term moving averages have turned to the downside. But other than that, currently we're definitely not in it. So what I would like to see is, what probably have to happen is we'll need to see some consolidation. The moving averages will have to, move down like this, and price will have to break above the short term, hook back to it, and bounce, and we'll be back in a 4-hour uptrend. If you see what I mean. So you can see here how on the 15, how that momentum is indeed to the downside. Swissie is weakening a bit because, let's see, yeah, price is pretty far. No, it's actually the same. Sorry, I was just looking how correlated they were. But basically, you can see bearish lines. So maybe a break, for instance, below these could be a breakout trade, just like the euro dollar. and we can see that dollar weakness. Dollar CAD is quite a mixture. I wouldn't be too interested in that. It's just making consolidation between these orange lines at a very non-interesting spot, not interesting place. So that does not seem appealing. Dollar yen is different. Dollar yen is definitely pulling away these moving averages fast. So any dip here and a bounce could be interesting, in my opinion. Definitely bullishly aligned. Definitely showing good signs of an uptrend here at the moment. However, price did have a shooting star at the top right here. I wouldn't be surprised to see a bit more retracement at one point or another if that's at this high, or do we see maybe one more push up to 104.15, 104.20? It's possible at one point. One would expect a bigger retracement. I'm still waiting for that. I know that yesterday I skipped the break of this particular bull flag. It's up to you to judge if that's really was a big miss or not. In my opinion, not really that much, to be honest, because it moved up just a couple of pips, 20 or something like that, in a very choppy manner. So I do not feel any regrets about that personally, but doesn't mean that the next one couldn't be a bit better, but just seems limited to me. Although the yen, the dollar yen, can push up when it is trending strong. It can continue to push for longer than we sometimes think. That can happen. However, as the trend just really started, I still want to be careful of that. And I'd rather wait for a bit of a retracement before looking for a bounce or taking a trade. Retracement to what? Maybe the 23.6 or the 38.2, for instance. At least a dip below the green moving averages, the light green. Yeah, pound yen is moving up just like the dollar yen as well. The only thing is we are pretty close to this resistance level. And that could be a pausing spot, but might not be as well. I mean, we've made these double dips below the moving average, as you can see previously, and on other pairs as well. Look, first break above, dip, and the next break is actually often better. Sometimes it takes 3 breaks, though. Here, 2, first dip, second dip, better break. So is this the same? First dip, second dip, better break? It's possible. It is possible. But just because it's possible doesn't mean we want to go long right in front of a daily top. And here too, there's about quadruple divergence on the 50-minute chart. This too has been pushing up after those breaks. I mean, after these bull flags. This one I still found interesting. This yesterday, not. I skipped that. It did break to the upside just today during the Asian session down here. And we had some smaller breaks yesterday. All right, let's take a look at the euro-AUD. We are getting a bouncing spot from this -272 target. That was expected, that we'd probably see some consolidation, and there was the potential to use, for instance, this bottom as a resistance. We just haven't hit that resistance as yet, although we were getting close to it. And we have to see. What we're looking for is a hit of that level and then a bounce below it again. That would be the indication of a euro-AUD downside continuation, in my opinion, on the 4-hour chart. The question is, from a daily perspective, are we going to go to the blue moving averages or all the way down to green? If we go down to the green, there could be still, after a bounce down, a breakdown, quite some interesting space here, but that remains to be seen. But that is potentially possible. But what we need is the break below here. preferably after we've moved up to hit this level. Why that level? Because I really want the price actually to go a bit above, preferably a bit above the short-term moving averages, and then below it again. This itself already could be enough though, because we actually did retrace to the zero line. That's the primary thing I'm looking for, by the way. So we did accomplish that. So the next key level now at the moment is this 4-hour support level. A break of that would basically signal the potential for a swing trade to the downside. Pound New Zealand is the opposite. This actually retraced back to the intermediate, retraced back to the short term, then the intermediate, then back to the long-term moving averages. I should give these nicknames because it's tiring to say intermediate, long-term moving averages. Does anyone have ideas for nicknames? We should name them something like, this is the, I don't know. I have no idea. That's something maybe you can help me with. Yeah, maybe that helps indeed. Short, mid, and long. That already is substantial help, indeed. We were at the mid and broke above the mid, fractal. So there could be some space here, but it's not really a swing trade because the space is limited. It would have to be more of an intra-week, intra-day trade maybe. Now, personally, I was looking yesterday for shorts because it hit the 1 hour long band. Plus, it was at very extended moving averages and etc. And also, it was actually hitting a target, I think. All right. So eventually, after all of these wicks, it seemed like enough confirmation to me. I put the stop loss at, I think it was 63, just in case it would make just a small break above this. Was a bit worried about that. You never know, because sometimes if the power is so much, you can get kind of like a small extension on a small time frame. Let me show you. On a 50-minute world, you can just get a kind of like a small push-up still. There will be another divergence, and then you'll see the downside. That's why in a reversal trade, using a stop loss that's like 1 or 2 pips above a high has its risks. However, it didn't go all too far before we still got this continuation, so that didn't go anywhere. I was quite surprised but apparently there's a lot of power here, and we're breaking the 4-hour fractal here. In fact, so where do I see this going? I would say roughly the long band at the moment. Let's put a fib though on it, and I'm sure that something would, well, minus 618 is there. 196.70 seems quite far, but looking at these daily candles, today's candle is already pretty big, but could put a fib on this downside as well, of course. We're at the 38.2 fib. That itself could be a resistance spot. The 50 fib, of course, usually has a bit more muscle, especially in this case, I think, because it is true that we had a strong down move, but it was a lot of choppiness connected to these moving averages. So I think a bit of a deeper snapback would make sense. So probably 50, 196.50 seems more appropriate at the moment. Whether we'll get there today remains the question, but could be tomorrow maybe, and then some resistance there. The fact that we only have a single divergence between these 50-minute tops, roughly, maybe double a bit, yeah, depending how you look at it. This actually technically didn't reach the zero line, although it was very close. So how do you count that? Is that a full divergence or not? That's a gray area. Technically speaking, it really didn't reach the zero line, although it's such a small difference. So this is single still, I guess. But so with only a single divergence, there's definitely still a potential with the 50-minute world easily to get a double divergence. So a break of this top, whenever it retraces, a break of the 38.2 fib therefore seems likely to me. And then the 50 fib would be the next spot it could go to, I would say. So probably the same scenario where we eventually make a dip below like here and then the dip up, a break above again would seem the most likely scenario, I would say. I don't know. That would be, I would say, my preference here for the path of least resistance probably. What do you think, Darshan? Do you see the same? Or do you see it more bearish or / more bullish than me? Let's take a look what Darshan has to say. Anyone else that wants to share their opinion, of course, by all means, let me know. Pound CAD, not too interesting, pretty choppy in fact. Got a lot of trend lines we can connect these tops and bottoms, basically indicating a triangle range consolidation. Darshan says that he sees it flagging now due to New Zealand turn imminent. So Darshan is, yeah, cheers, Bob. See you soon. Darshan is looking at a potential turnaround here and bounce up on the Kiwi, which if that would mean a bit of Kiwi strength, that would mean the pound New Zealand potential to move down as well with that New Zealand strength. So it could happen indeed. I definitely think 38.2 fib has at least a minimum to make kind of a correction similar to this, one would expect, indeed. After that, it's a bit, that remains the question indeed. How much, would it be just a retracement or more of a reversal sign? That also will depend on how fast this flies down. If it flies down fast, then it's more of a reversal sign. If it moves more like a bull flag, then it's looks more like a retracement sign as well, I think. So that will remain to be seen. What else do we have left? Odd yen is also moving up a lot, just like all the yens, in fact. I mean, the question remains, is this really the start of a new uptrend? It's possible. Still somehow something in me says that I want to see a bit more confirmation, but this is looking like a daily breakout here. Why is that? Well, look, if we look at the daily chart, what do we see? We see price was above the moving averages. Price went back to the long-term, the mid moving averages. Then tried to break above it, then managed. Now it's breaking again above it. So it could be a break-it scenario. It's possible. Something like here as well. We had a good run up. One of the resistance lines, though, that we have to take a look at and be aware of is this one right here. But if we do break that, then we see the potential to move up to higher targets, such as, for instance, the 111.15, which is minus 272 of the weekly chart. Or if we fib this particular part, we see the potential for price to go to the minus 618, which is the 111. And there, of course, we see confluence between those two fibs. Right? We see very nice confluence between the bigger weekly target and the the minus 618 of the daily target. It's right at 111. So once we break above that monthly resistance, that's when I would get really interested in the potential here in these green squares. Starting to look that we're breaking to that direction, starting to look that that is going to pan out and play out, but we still need to break up that monthly trend line. And price is approaching it, and I wouldn't be surprised if we make a bit of a dip and up and a dip and up before we do push through it. Whether we push through it, it's something that remains to be seen. Though I guess the chances are decent, but still looking for confirmation before anything, because we're still close to resistances. Otherwise, if we do break above it, that would be great. It would be a wonderful trade, wonderful trending mode for those weeks that it lasts. So I hope it would, because I think it would be good trades for all of us. That potential would be nice, up to 111. We good, minus 272 and minus 618. It could even go up to 120, which is the bigger weekly minus 618 and the minus 1618 of the daily. That of course is definitely would mean a further extension even than the first target. We'll have to see as price gets higher whether that's possible or not. But for the moment, those green squares look decent upon the break of the monthly trend line. So I guess maybe, do you have any questions we can go through? Are you curious about some potential trade setup on a particular currency pair? We don't have to use moving averages like we've done the last 2 weeks always, but let me know if you have some particular tool or setup or currency that you're looking at that you might want to get my feedback on that, by all means. Let's see, the Euro CAD. The CAD has really funny strength all of a sudden. The CAD Swissy seems to have that strength as well. I was thinking about trading this one, but I somehow lost sight of it. But it did look like a bull flag here, and it did look like a bounce off the short right there. The moving average is short. So a bounce off that seemed likely, and we are getting some follow through, not maybe that much, but still a bit. The target of that would be these long moving averages. And the target would be the minus 272 as well at 81.60. That was an interesting breakout trade there on the CAD Swissy. Let's see, the CAD Yen. Let's take a look. Is there a triple bottom and a break of the neckline? Let's see. CAD Yen 4-hour chart. Is there a triple bottom and a break of the neckline? Well, I do see double bottom. I guess it depends how you count it. This is one bottom for me. This is a second. If you count these particular 2 points as separate, then I guess that's how you have triple. I don't know. Or did you zoom out a bit more? No. So I'm not sure. Maybe you count this as triple. I would, if you would ask me, it would look more like double. But I guess that's a technicality. It really doesn't matter that much, I guess. But The neckline of that would be this line here indeed. We would want to take the left shoulder and the right shoulder here. Although this didn't stop too much. The neckline is the head is here. Not the head is here, I mean, but the no wait, am I doing it wrong? Let's see. This is it's funny because it actually has a something in between, that's why. It's kind of like a double bottom with a short head in between. Well, we certainly broke whatever line we used. We certainly broke out of that resistance. There's maybe one resistance line left. Is actually this inverse resistance line maybe on the chart, like that. Let's take a look at the daily. Wei is saying that this could be looking like a flat, a running flat, which is like an expanding wedge. And that's definitely possible. We do see basically a break of the bottom here and a break of this top. $95. 95 would also be a resistance in here. We got some zone in here that could be resistance. So there seems to be maybe some potential for a bit more. I mean, it isn't a strong up move, but one would expect some resistance sooner or later, and those could be the levels that the resistance could use. Just like the other yens, we do have also a lot of divergence between the tops. So to me, yeah, I agree if you were saying that the trend lines here were broken, but that was already a while ago. So not sure how you are looking at it right now, but it seems to be very close to resistances. So that doesn't appeal too much for trading. If you took the break earlier, maybe, then that's different, of course. So if let me know if you have any follow-up question, okay, regarding that. Well, the yens look like they deserve and could get into some retracement. Also, this CAD yen to me. Oh, you haven't taken a trade. Then I think the whole idea of the double bottom has already, had a very big effect on the price. And I don't think trading it here because of the double bottom would be good, because it's too late for that idea, I think. It's better to wait for a better point. Just because we find resistance in here doesn't mean that there couldn't be a good buy maybe as it dips down again and you get a better price. Whether that's true or not, let's take a look at the higher time frames to get a bit of a idea. Well, if the yen indeed breaks, then the CAD yen will follow as well, so it's possible. We would probably need to bounce off of the blue one to get an idea that this is going to continue up again, for instance. So waiting for some hook back maybe to the 50, 61.8 fib, that would probably be better if you're bullish on that, I would say, personally. Alrighty, folks. Tonight we got a webinar, by the way, just in case you're not aware. We have Forex Strategies Part 2. Let me see if this is the right link. Yes, it is. We got Basic Forex Strategies Part 2, 6 p.m. Central European Time. So I hope to see you then. And next week we have our usual lineup. We got the trading confluences on multiple time frames. We got Fibonacci trading. We got scaling in, scaling out. We have with Talantala the weekly recap on Monday, and Ranko and Range Bars Part 2 Wednesday evening. And next week, Thursday, we're looking at market structure. However, tonight, once again, we have Basic Forex Strategies Part 2. All right. So thanks so much for being here. And above all, wish you all great trading during today. And see you soon. Cheers.